In 2024, a quiet transformation began to accelerate across the North American auto industry. The headlines were dominated by one story: the Japanese automakers. We saw how Subaru, responding to years of unpredictable trade moves, shifted production of its Canadian market outback from Indiana back to Japan. We saw how giants like Toyota, Honda, and Mazda began redrawing their maps, facing an estimated $25 billion annual loss due to American tariffs. The narrative was clear. U.S. protectionism was pushing Japan away, and Canada was emerging as the silent winner. This story was true. It was alarming. And it was also just the tip of the iceberg. While the focus has been on Japan, a much larger, more systemic shift has been occurring in the shadows. This is not a Japan-specific trade dispute. It is a full-blown industrial migration. A second wave of global manufacturing giants is also heading for the exit. They are not America's rivals. They are its closest and most important allies, the industrial powerhouses of South Korea and Germany. In this video, we will not reanalyze the Japanese departure. We will analyze the second wave. We will investigate why corporations like Hyundai and Volkswagen are also pivoting to Canada, investing billions in a strategy that hedges against American uncertainty. This is no longer a Japan problem. This is an allies problem, and it signals a fundamental crack in the foundation of America's status as the world's most stable industrial hub. The second wave, South Korea's quiet pivot. For the past 2 decades, the symbiotic relationship between South Korea and the U.S. manufacturing base has been a story of success, particularly in the American South. States like Alabama and Georgia were rebuilt in part by massive investments from Hyundai and its affiliate, Kia. The Hyundai plant in Montgomery, Alabama, is more than just a factory. It's the economic heart of a region. These companies invested billions in the U.S., building cars for the U.S. market, based on a shared understanding of stability and free trade. That understanding is now broken. When the 2025 U.S. tariffs and trade policies were enacted, they didn't just hit Japan, they hit South Korea. Suddenly, Hyundai and Kia faced the same crippling choice: absorb massive tariff costs or rethink their entire North American strategy. But their response was different from Japan's. It was quieter and far more focused on the future. While the U.S. administration offered massive subsidies like the Inflation Reduction Act, IRA, to build inside the U.S., Hyundai did something fascinating. It took the subsidies, yes, but it also began a parallel, multi-billion-dollar investment surge into Canada. This wasn't a defensive move to avoid tariffs. This was an offensive move to secure the next generation of automotive technology. In 2024, Hyundai Motors announced its plan to build a massive $1.2 billion EV battery facility in Canada. This wasn't a small satellite plant. It was a cornerstone of their entire future EV strategy. This move reveals the new corporate logic. Why would Hyundai build a battery plant in Canada when it already has massive assembly plants in the U.S. South? First, diversification of political risk. Hyundai executives, like their Japanese counterparts, learned that placing all their bets on one country's political stability is no longer a safe wager. The U.S., once the anchor of global trade, is now seen as a source of volatility. Canada, in contrast, offers predictability. Second, Canada's all-in EV strategy. Canada didn't just offer money. It offered a complete top-to-bottom industrial ecosystem. It offered access to critical minerals like lithium and nickel, which we covered in our previous video. It offered clean, low-cost hydroelectric power to run the factories. And it offered tariff-free access to both the U.S. market via USMCA and the entire Pacific market via the CPTPP. This is a strategy of why choose one when we can have both. By building its core EV components in Canada, Hyundai can feed its U.S. plants in Alabama and Georgia, while also maintaining a separate non-U.S. supply chain that is immune to American political chaos. It is the corporate equivalent of building a strategic backdoor. The South Korean automakers are publicly committing to America, while privately investing billions in an escape route. The second wave of migration had begun, But it was the third wave that would send the loudest signal of all. The third wave, Germany's $7 billion bet. If the South Korean move was a quiet hedge, the German move was a cannon shot. For 75 years, the U.S.-Germany industrial alliance has been the bedrock of transatlantic trade. German giants like Volkswagen, BMW, and Mercedes-Benz built their U.S. presence on a foundation of mutual trust. The Volkswagen plant in Chattanooga, Tennessee, the massive BMW manufacturing hub in Spartanburg, South Carolina, which for years has been the single largest U.S. automotive exporter by value. These companies are not just in America. They are a core part of the American manufacturing landscape. So in 2023, when Volkswagen, the largest automaker in the world, decided to build its very first overseas battery gigafactory, the entire world assumed it would be in the United States. It was a logical assumption. The U.S. is its biggest market, and the IRA subsidies were massive. But Volkswagen did the unthinkable. It chose Canada. The announcement was staggering. Volkswagen will build its new battery cell gigafactory in St. Thomas, Ontario. The scale is almost difficult to comprehend. Initial reports valued the investment at over $7 billion, the largest single industrial investment in Canadian history. When fully operational, this plant will be one of the largest factories of any kind on the entire continent. This was not a decision about a 25% tariff. This was a 50-year strategic decision about the future of the company. Volkswagen executives were blunt in their reasoning. They stated publicly that Canada offered a better overall package. Let's deconstruct what that package means, because it's the key to this entire global shift. Number one, stability. Again, the primary driver. European automakers, like the Japanese and Koreans, now view U.S. trade policy uncertainty as a critical business risk. Canada offered a stable, predictable partner for decades to come. Number two, speed. Canadian officials at both the provincial and federal level, from all political parties, moved in lockstep to make the deal happen. They offered a clear, fast, and simple path. This bureaucratic unity stands in stark contrast to the political gridlock and volatility in Washington. Number three, resources. Like Hyundai, Volkswagen chose Canada because it is a raw material superpower. The Volkswagen Ontario plant is strategically located to be fed by Canadian lithium, nickel, and cobalt. They are building their factory on top of their supply chain. Number four, the energy. A gigafactory requires a giga amount of electricity. Canada offered access to 100% clean, low-cost, and, most importantly, stable hydroelectric power. This decision sent a shockwave through the global auto industry. It was a declaration that for the most important investment of the next generation, batteries, America was no longer the default choice, and Volkswagen was not alone. BMW, the other German giant, announced its own $500 million investment, not to expand its U.S. plant, but to build a new battery facility in Thailand, explicitly to avoid U.S. tariffs and diversify its supply chain. Mercedes-Benz is following a similar model, spreading its investments across Canada and other regions. The Japanese were the first tremor. The South Koreans were the second, a quiet pivot. The Germans are the earthquake. They are signaling a systemic flight to safety. The unifying factor, the real cost of uncertainty. So let's analyze the common denominator. We have three distinct industrial powerhouses: Japan, South Korea, and Germany. They are America's three most important industrial allies, and they are all independently making the same strategic decision to de-risk from the United States and build their future in Canada. This is not a coincidence. It is a trend. This entire migration is not driven by a single tariff. It is driven by a single, crushing expense: the cost of uncertainty. Think of it this way. In the 20th century, a corporation's biggest risk was geography, being too far from your market. In the 21st century, the biggest risk is politics, being trapped by an unreliable partner. The volatile U.S. trade policy of 2024 and 2025 has, in effect, created a new invisible uncertainty tax on every single product made in or shipped to the United States. This tax doesn't show up on a customs form. It shows up in shareholder meetings. It shows up in the inability to write a 5-year plan. It shows up in supply chains that break overnight because of a new rule. Canada's entire strategy has been to position itself as the antidote to this tax. Canada's value proposition is simple. We are the safe bet. They have successfully turned stability into their primary export. They offer a unique triple threat advantage that the U.S. cannot match. First, as mentioned, they have the raw materials, the lithium, the nickel. The Canada auto manufacturing boom is built on a foundation of these critical minerals. Second, they have the trade access. The USMCA Pact gives a Volkswagen Ontario plant perfect tariff-free access to the U.S. consumer market. They get the prize without the risk. Third, they have the global network. The CPTPP, the Trans-Pacific Partnership, gives them a free trade bridge to Japan, South Korea, and the entire Asian market. A company like Hyundai can build one factory in Canada and service the entire world, all while being insulated from U.S. political fights. This is a structural realignment of the entire North American economy. The U.S., through its own actions, has accidentally made its quiet northern neighbor the single most attractive place for global industrial investment. It has turned the industrial backdoor of the 1980s into the industrial superhighway of the 2030s. Conclusion: the realignment. So what does this mean for the American worker, farmer, or citizen? The original goal of the U.S. tariff policy was to bring jobs home. It was a promise to revitalize American manufacturing. The data now shows it is having the opposite effect. For every job potentially saved at a U.S. steel mill, the U.S. is losing the next generation of jobs. It is losing the billion-dollar battery gigafactories. It is losing the high-tech research centers. It is losing the mineral processing plants. And it is not losing them to rivals. It is pushing them into the arms of its closest allies, who are now consolidating their power in Canada. The original video, "Trump Rages as Japanese Automakers Flee," got the first part of the story right. But the real unspoken headline is this: it's not just Japan, it's Korea, it's Germany. It is a global industrial exodus, away from volatility and toward stability. This is the great realignment. The United States is no longer the default safe haven for global capital. Its allies are, for the first time, building a Plan B. And that Plan B is Canada. When you see headlines about U.S. tariffs, do you still see a strategy to protect jobs? Or do you now see a policy that is pushing its most important allies, Japan, South Korea, and Germany, away? How concerned are you that America's uncertainty tax is costing it the next generation of industry? Let us know your thoughts in the comments below. This migration of allies is one story, but who is filling the industrial void they are leaving behind in North America? In our next video, we will analyze the other major player making a strategic move, China's BYD and its new multi-billion-dollar strategy in Mexico. Thanks for tuning in.